Hi, I'm Andrew Kershaw, General Manager of Workday Financials, and I'm responsible for our core financial management products here at Workday. In my role, I speak with market and industry leaders and analysts from around the world who are actively researching trends shaping the future of accounting. I spend time with CEOs and CFOs, chief accounting officers and controllers, and finance department heads, from companies that are part of the Fortune 500 to those that are just beginning their journeys to join that storied list. And these organizations are prioritizing moving to the cloud, driven by the need to transform the way they work and to reduce the costs through system consolidation. A vital benefit includes access to new digital technology such as AI, which is unavailable with decades-old on-premise systems. In today's masterclass, I'll share some of the major highlights and concerns on the implications of AI in finance and particularly accounting. And for accounting, we're going to explore how AI helps accounting professionals expand their traditional role of keeping the books so they can drive business growth. And increasingly, accounting professionals must find opportunities to increase value, not just protect it. And hopefully, this will be informative as you assess your own AI for finance strategy. There are 5 sections to our masterclass today. Section 1, why consider artificial intelligence? 2, the opportunity for finance, AI for automation. In Section 3, we'll explore a new era for automation through the possibilities of LLMs. Section 4, document intelligence, automation and compliance. And then finally, in Section 5, transitioning to strategic work. So let's get started. So why consider artificial intelligence? Consider these 3 major trends. First, chief accounting officers and their teams have been asked to do more valuable work without expanding their teams. But too much time is spent on low-value transaction processing. And second, skilled accountants are retiring in droves and fewer CPAs are entering the workforce. And then third, with the rapid advancement of machine learning and AI technologies, there is uncertainty of skills needed for the future of accounting. The good news is technology, and specifically AI, can help in this transformation by automating transaction processing and creating more time for strategic work. AI use cases are readily available across core business processes, including record keeping, procurement, and financial analysis. For example, teams leveraging AI for strategic supply sustainability or risk analysis and auditing to enhance controls. And teams are using AI for natural language queries on actuals and forecast data to understand the financial variances in deeper ways. For the purposes of our masterclass today, we're going to zero in on using AI to redesign core elements of accounting and bring the highest levels of automation, which we believe will usher in the most exciting era in accounting's history. AI holds immense opportunities for finance through the ability to automate. Automation is going to transform accounting, but today, this is easier said than done. 2 challenges, trust and experience. The nature of accounting is accuracy, repeatability, explainability, and auditability. And in some respects, artificial intelligence does not align to these requirements. We've all heard stories in the press where AI created wrong or funny answers, which makes finance professionals nervous. But when directed properly, AI is a powerful, proven technology for forecasting, modeling, and predictions. For example, using weather data to predict retail store sales. A vehicle services center assessed weather data, blended it with their point of sales data, and used AI to predict sales when it rains. Turns out people don't like to get their oil changed when it rains. By using this data to model and predict scenarios, businesses can focus on driving the most profitable results. Key to this is the quality of data that feeds the algorithms. For AI, the data influences its output. So if you're using AI from datasets validated by accounting and finance, and it's good enough to publish in financial statements, well, you're creating conditions to receive credible and consistent answers. Trusted data, trusted outcomes. So while trusted data is great, there are further requirements for finance teams. You've used AI in your personal financial life as a consumer. Think about a credit card alert you've received for a potentially fraudulent activity. Over time, those alerts have gotten more sophisticated and picking up more questionable transactions. The experience has also evolved. At first, your card was just blocked, and now you get an email or an SMS and a chance to say, no, that's me. And this gives you a level of control. And in turn, the machine or the algorithm with that huge data set learns whether it was a good prediction of an unusual activity. And this is a great example of AI detecting the anomaly on a financial transaction and alerting you to take action. Sometimes its reasoning is obvious, such as the transactions from a different country, or it's an unusual gift, or a series of small, quick purchases. But other times, it just makes you wonder why the machine thinks there is an anomaly. It's wrong and it's frustrating as it slows the transaction down. The experience is overriding the data result. So let's think about this from the perspective of a professional user. What if you have to have confidence in the system recommendation? If your job depended on it, would I trust it? Well, for accountants, the journal line is analogous to the credit card transaction. Discovering anomalous journal lines is critical, but it's also time-consuming. And if AI is going to help, then the accountant needs to understand why the journal line anomaly is flagged and what makes it different. Without this understanding, they're not going to trust the system, and it becomes easier just to disregard the AI's insight. Accounting wants AI to detect anomalies that a human might miss and save time by correcting it, but they must trust, and it must be earned through clear, understandable, repeatable, and reliable outputs. The experience matters. AI can add even more value than it does today. Let's look at two areas. First, the other side of the coin in finding anomalies, matching, finding matches, not finding transactions that are different, but finding the transactions that are the same. Transaction matching is also a time-consuming and critical process across multiple operational areas. And second, there is growing potential for AI in the area of document reading and understanding. Optical character recognition, or OCR, and ML techniques are already valuable in automating expense receipt scanning and invoice submission. Receipts work well, but they can get complicated with variables like currencies and taxes. And while the complexity of invoices with tables within tables and multiple rows and multiple detailed text and tax fees and totals, it all still requires significant manual effort to correctly extract and assign the data. And this results, for example, in the AP clerk having to manually match hundreds of rows from a PDF to system data. For these two areas, the potential of AI and LLMs lies in creating and managing rules and ingesting the more nuanced document layouts while understanding the actual content. These advancements will not only reduce the manual intervention, they will enable the new era of automation. Today, we've already delivered great enhancements in AP and AR automation and insights for journals, but we are just getting started. For those of you looking to understand what generative AI is, simply put, it's the ability to create content. Extractive AI is the ability to extract and understand the content, and both are phenomenally valuable in the automation of finance processes and beyond. Together, generative AI and extractive AI provide the perfect complement to rules-based automation. As we discussed, accounting involves extensive matching tasks, such as matching a customer payment or matching invoice lines to purchase orders. And traditionally, this matching relies on user-maintained rules to easily find the matches and then manually handle the rest. But over time, the rule set becomes extensive, overlapping, and outdated, and it's a nightmare to manage. The first thought is, of course, to try and have generative AI do the matching, but we know that explainability, repeatability, and auditability quickly become a challenge. But what if we shifted the rule-based model and treated them as lines of code? Well, generative AI excels at continuously building and managing code, or a rule set, and removing outdated and overlapping rules, and updating the rules as the data changes. Using generative AI retains the benefit of a rule-based system while eliminating their drawbacks. And we can apply that exact same model back to the example on journal lines anomalies. Instead of relying on generative AI to find the anomaly directly, we use it to write and manage the rules that detect the anomalies. This approach leads to explainable automation that can be verified and then gradually trusted. Along with writing code, LLMs are highly specialized at extracting and understanding and generating content. In accounts payable, with the advanced capability of extractive AI coupled with OCR, the AP teams can finally achieve the accuracy and matching required for touchless processing within the acceptable level of risk. In accounts receivable, using generative AI to draft a collection letter is another area that's just ripe for automation. Predicting at appropriate areas to focus, to quickly generating the letter in the proper tone, and then combining that with the detailed data produces compelling requests, drastically reduces the workload. Applying generative and extractive AI in these ways builds on the existing automation, but adds an important dimension to it, one that keeps the users in control. Accountants didn't go to school to make journal entries, and with AI technology in their hands, they're instead able to strategize how to drive the business forward. Generative AI prompts us to rethink how to approach and solve bigger problems that exist. Today's accountants use unstructured content such as documents and contracts to help them complete processes, to answer questions, and to manage the risk and verify key clauses. There is an incredibly exciting opportunity to combine these capabilities with another area where LLMs have shown significant advancement: understanding the meaning of questions or policies and the ability to generate answers to those questions. The opportunity is for Gen AI to combine understanding of accounting, data, and the unstructured content to create and manage accounting transactions and ultimately automate. Let's start with a simple example. AP teams are inundated with email queries on the status of an invoice, the resubmission of documentation, or a request for payment. Understanding the request, prioritizing the response, retrieving the status, and then authoring the email, thus freeing up capacity within the AP team. Essentially, automating standard conversations and answering those questions from the data without the need for an AP clerk to intervene. Now let's go to the next level. Documents are at the heart of so many accounting processes. The documents contain the data necessary to create the transaction, with clauses that add nuance to the treatment and policies that describe the appropriate standard. Imagine a world of accounting where a document can be ingested, understood by its form and its content, what it represents in terms of accounting process, then initiate the process in accordance with the company accounting policy. Let's look at two examples. Take a lease. The GAAP accounting standard, ASC 842, dictates the treatment. The lease contract contains all the data necessary to record the payments as the cost of the lease, record the interest portion as an expense, and set up a depreciation schedule. But the contract could contain special provisions, such as a rent-free period or utility costs, all of which need specific treatment. Now consider a sales contract. The product or service sold, the price, the model, is it subscription or usage-based, and the duration, they're all in the document, signed by the customer, so it's an authoritative record. The document contains the components needed for the creation of the subscription lines and the revenue schedules. Finance organizations spend a huge amount of time examining documents, checking the accounting and finding these nuances. Gen AI can change this process by deriving the appropriate depreciation schedule, the valid revenue recognition, or the correct capitalization. Now imagine the accuracy and the speed in which you'll be able to process the sale of a product, the purchase of an asset, and the signing of a lease. This is when AI will have really transformed the role of finance, changing the job to focus on growth and optimizing the underlying processes. Strategic work. What actually constitutes strategic work across the different levels? What skills are needed, and what potential does generative AI offer here? As accounting becomes more automated, strategic analysis of processing and data will increasingly dominate the role, making data science an essential skill. However, the most interesting insight from leaders dedicated to organizational development is the importance of a skill that's hardest to teach: curiosity. This trait drives individuals to ask new questions, analyze data in novel ways, or identify meaningful variances. Discover connections that reveal fresh opportunities. Teaching curiosity is challenging. It stems from experience, exposure to diverse situations, and the ability to think about problems from multiple perspectives. With its vast repository of case studies, education materials, and actionable data, generative AI can play a crucial role in guiding early career professionals through the process of discovery and curiosity. It can help them understand context and prompt them to explore further and encourage persistent inquiry. At every level, from the board to the CFO, the assistant controller to the staff accountant, there are critical questions to be asked. While fully incorporating AI into our daily habits will take time, we're confident that it will augment human decision-making, helping professionals dig deeper and find opportunities to grow their business. We are incredibly excited about the potential value that Gen AI and Extractive AI can bring to the accounting teams, ushering in a new era of automation. Complete automation of tasks within financial processes may appear a way off for the day-to-day practitioner, but AI offers a fresh perspective for teams to think about automation in a different way. Finance teams should use this next wave of innovation to rethink and redesign and reshape processes to be simpler with fewer or different steps, to get teams out of transaction processing and focused on exceptions and insight. This was going to require taking learnings from previous AI implementations into consideration. The AI results will have to be accurate and explainable in order to build trust with users or face resistance to adoption. And the experience will matter as much as the technology itself. The skilled professional is still critical to the finance function, but the work they do will be reflective of their advanced skills, creativity, and human ingenuity.